Okay, today we're going to talk about the process of qualifying for a mortgage loan. A mortgage loan officer will often receive requests for qualification documentation from borrowers contemplating or in the process of purchasing a home. Once the application is complete, the mortgage loan officer, or MLO, can then evaluate borrowing capacity. And when this happens, two types of letters can be requested. One is the pre-qualification letter, and for this letter, really basic unverified information from the borrowers that the borrowers supply is used. And then an estimate of loan amount is issued based on that information that the borrower supplied. Okay, the second is the pre-approval letter, and when doing the pre-approval letter, verified information from the borrowers is actually used. This letter is then underwritten and approved by the lender. Being underwritten means that an underwriter will analyze the loan package and then sign approval for it. Next, we've got the qualifying process, and the qualifying process is all about applying income against expenses, and overall is checking capacity. It's also about assessing usable assets or capital, checking credit, and verifying if the borrowers comply with the underwriting guidelines for the mortgage product that they applied for. Sometimes the experience of qualifying can be really stressful for borrowers. This is the case because a lot of times borrowers are disclosing really private, sensitive information about their finances and their life. A mortgage loan officer has to make a sensitive but accurate assessment of the borrowing capacity. A really skilled mortgage loan officer will often ask pretty penetrating questions that are designed to uncover vital information, but most of the time they will do so in a very diplomatic, compassionate way. What they're looking for in these questions is any information giving them an idea about the borrower's 4 C's of lending. The 4 C's of mortgage lending are credit, capacity to repay, capital, and collateral. Okay, so next we've got the actual application process. The standard application for a mortgage loan is referred to as the Uniform Residential Loan Application, or the 1003 or the Form 65. These are identical and they're used interchangeably, but the most commonly used is the 1003. The loan application is completed by the borrower. The borrower needs to fill out that information as accurately as possible. The borrower will then sign on it, certifying that the information is true. The mortgage loan officer will provide a final copy of the loan application, corrected with final information used for loan approval, at settlement for official signature. Okay, once the loan application is complete, the mortgage loan officer will then evaluate the information in the loan application to determine which loan package from which lender the borrower qualifies for. A loan processor will then follow procedures to verify that all the information is true and correct. Once the processor verifies that the lender's loan requirements have been met, the file is then packaged by the processor following lender instructions, and the completed package, including the appraisal and title report, are sent to the underwriting department. In the underwriting department, the underwriter reviews the loan package to make sure it conforms to all the guidelines required for that loan product. The underwriter also reviews the appraisal and title report and may do additional validation of employment, mortgage payments, credit, and anything else necessary to document the loan. And the underwriter is the one who has the authority to approve or deny the loan. The loan can be one of 3 things. It can be approved, it can be conditionally approved, and in this case the conditions are sent to the originator to resolve, or it can be denied. We're going to go into more of the specifics of getting a loan in future videos, but that so far is the basic process of what happens during the process of qualifying for a loan.